Hello, everybody. This is Toby Gennaro. I've got a good-looking crowd online today. A little smaller, but that's all right. We'll get in some Q&A maybe. Let's do a sound check real quick, as we normally do. Make sure everything's coming across loud and clear. My technology's working all right. So if you guys can hear my voice loud and clear, you can see the current splash screen. It says Advanced Strategy for Liquid Markets. That'll be our topic for today. Some of you online could just let me know via the question box on your screen. That would be good, and then we'll, without further ado, we'll jump right into the content, get the recording started and all that. Great, guys, thanks for doing that. So Chip, if we can get the recording started, we'll do a formal intro for recording purposes and then launch into the content from here. Hello, everybody, and welcome. I'm Toby Gennaro, and I will be your presenter for this morning. The topic for today is Advanced Strategies for Liquid Markets. So I'm going to be talking through a specific technical trade setup that you can use in your own trading. We'll be able to identify a specific entry point with this strategy, identify an exact stop loss, and then set our profit targets by utilizing this, this simple strategy. Now, for those of you that are on the live webinar, if you have questions during this session, you can just type those into the question box on your screen, as you normally do, and I'll be asking you some questions as well, possibly. So we'll try to keep it interactive, which always makes it more interesting. And as we normally do, by way of formality, I just need to put up this risk warning and disclaimer as part of the business. I'll leave this up for about 30 seconds or so. If you could all just have a quick read through. In brief, what this is saying is we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody have a chance to take a look at that? We're good? And just one more disclaimer here from Nadex. You can have a quick read through this one. It's a short one. And once we wrap up the disclaimers here, we'll jump into the content for today. All right, everybody good? Let's get started then. All right, so since this webinar is brought to you by kind of a team of Nadex and Trade with Precision, just want to take a couple of minutes here to introduce both organizations. Trade with Precision was created back in 2006 by a gentleman by the name of Nick McDonald as a provider of trading education for retail traders. So we are an international team of traders that provide training for some major brands of exchanges and brokers around the globe. And we teamed up with Nadex to bring you some very specialized education specifically around their products and their contracts. So Trade with Precision is a company that's run by traders for traders, and we are specialists in trading strategy education. Nadex is actually a derivatives exchange, and so that means they are subject to regulatory oversight by the CFTC. So this is a regulated industry for your protection. Nadex has been in operation since 2004. They are part of a much larger derivatives organization known as the IG Group out of London. Nadex operations, however, right here out of Chicago, which is the hub of the futures and options market. So all contracts we'll be talking about today are cash settled. There's no risk of having a mountain of corn delivered to your front yard, anything like that. There are over 25 global markets that you can trade with two unique contracts, binary options and bull spreads. And so today's webinar will be focused on a trading strategy that you can use to trade these binaries and spread contracts. Okay. Now you'll find the Nadex trading platform available on all your devices. So whether you're in the office or on the go, you can monitor your positions or place a trade perhaps. Some automated filters exist for identifying various trading opportunities simply by searching on the binary price. All devices are fast and secure with flexible features that you would expect from a desktop platform, but now you're effectively mobile. So you'll find most popular markets available in real time with things like customizable chart features. You'll be able to get multiple time frames on your devices with all the indicators that that you would normally expect. So just like in the office, you can view your open positions. You can work on working orders, account balances, all while you're on the go, or even if you're just around the house. Okay, so got all the devices covered with the platform. And for today's agenda, we will be talking through some advanced technical analysis tools to show you a technical trade setup that we tend to use on a regular basis. So we'll look at things like trends, we'll look at multiple time frames, we'll look at things like support and resistance levels in the price action, identifying pivot levels, Fibonacci retracements to help us determine our trade entry, our stop loss, and our trade exit points. We'll then go ahead, combine all of these technical ingredients to form then a trade strategy that we can use over and over again in the markets. And so I'll give you another webinar plug where we're doing this live, showing you how to use this strategy in real time, and then utilizing the benefits of a fixed risk contract like Nadex binaries and spread contracts to do all of this, okay? All right, so in this section, let's get into some of the technical analysis that we use to trade our own money and show you guys some of the key things that we look for technically in the price action to begin to set up and identify this, this trade strategy for ourselves. So the typical three trending conditions that we'll find in every chart that we look at. In this first example of an uptrend, we can immediately see the chart structure here defined purely by the price action alone, right? So at very first glance, we see that the price action is making successive higher highs and higher lows, right? So once we identify the predominant trend here, we can then begin looking at the individual candles that make up this trend to determine the price predictability that we have. In the next example here of this downtrending chart, we can see some similar characteristics of successive lower highs and lower lows that comprise every downtrend that you'll ever look at. You can also see in the price action here that every time we get a large candle move, it's followed up by some type of a snapback rally. And that's why it's important to look for small candles throughout these trends to comprise predictable trends so we can anticipate exiting our position on some of these large candles. And so if you could picture, you know, the 10-20 period moving averages would be flowing right along here. And as, you know, the downtrend picks up and we start to get some of these large candles, we get a lot of extension from that moving average. And that's usually where we want to be taking some of our profits, because more often than not, that overextension simply means a snapback into that moving average zone between that 10-20 period moving average. And then we get another candle set up, and then there's the next move down into that trend. And that's why we get these lower highs and these lower low setups, because those are just the basic mechanics of how trends flow and how they work. So we've just looked at an uptrend and a downtrend, and then we're seeing here a no trend. So if our eyes are trained properly to identify trending chart structures, then we can very quickly determine here that this chart is not trending, but it is actually ranging. So as we can see, there is, you know, really no clear succession of higher highs or lower lows in this case. We can see a lower low followed by a higher high, and then, you know, a higher high followed by a lower low. So everything's very kind of out of sorts. The difference in these chart structures, very obvious to us, and we can readily identify tradable trending charts or predictable price action at a first glance just by looking at the kind of charts that we do want to trade, the uptrends and the downtrends, and then the charts that we really want to steer clear of. Make sense? All right, it's pretty simple stuff. You guys have heard this before, so that's good. Now, this is where some of the complexity lies in recognizing price action structures and defining a trend. So when you look across multiple time frames, we can see the obvious trend is down just by taking a step back, seeing, you know, like we just talked about, the lower highs, the lower lows on, say, the 60-minute and the daily charts like we see here. Gives you a better sense for, you know, what's happening in the overall trend, both the short-term and the longer-term trend. So you don't want to get fooled by what seems to be a lot of simplicity within trends. Trends can get very complex, and the key to getting the trends right is to look at multiple time frames to get multiple charts in agreement. All right, so when you begin to see the weekly, the daily, you know, the 480, the 240, the 120, the 60-minute all trending to the downside, now you know you're in a solid trend and you're looking to sell the rallies. But as you're probably aware, right, what happens when these charts are in conflict? Because that happens as well, and that's where things get kind of tricky. Not a problem, you're just waiting for the charts to get back into alignment. Really the worst thing you can do is kind of jump the gun, dive back into a downtrend before actually getting the proper chart structures that you're looking for and getting the proper entry signal for a short trade in this particular case, in this obvious downtrend. Okay, so we can also check in this case, we've got the 60-minute and the daily chart. We can check the 120-minute time frame. We could look here at the 240, the 480 charts. So I'm looking for a whole series of time frames that are in agreement. And what this does is gives us a lot of confidence as technical traders to trust the charts and more or less do what the charts are telling us to do, as opposed to, you know, sometimes what our mind is telling us to do, because those two things can be drastically different. So it doesn't matter, you know, what the time frames actually are, such as in this case, it's the 60-minute and the daily, but just remember it's the trigger chart and the confirmation chart. So these charts could just as well be the 5-minute and the 15-minute time frames, or the 1 and the 2-minute charts. Again, it doesn't matter what the time frames are, it just matters that you're looking across a range of relevant time frames to get good confirmation of a valid trade setup, and that you're aware of the higher time frame trend. Like in this case, we're kind of using the daily chart as our anchor chart. Okay, so we just want to make sure that, you know, if we're going to be trading some of the lower time frames, let's make sure that we're trading those time frames going in the direction of the higher time frame trend, and that just boosts our overall probability. All right, so the golden rule of support and resistance, very basic concept. Most of you have probably heard it at some point previously. We've talked about this on some previous webinars. When we identify these support and resistance structures that you see here, we need to keep them in memory as we look through our charts to identify then when price is retesting these levels, since the exact price level may not necessarily be visible on the screen or the chart time frame that you're looking at. So you may need to scroll back in that case, you know, unless you're using horizontal lines on your charts, like shown here, then you'll, you know, as price continues to move on, you may not be able to see all this price action on your chart, but you'll still have those significant lines drawn in, and you'll be able to be aware. You can attach, you know, some different alerts to those lines to make you aware of when price touches those support and resistance lines, in case you're looking for a trade setup around those lines. So looking a little closer at this chart setup, we have multiple touches establishing our true support and true resistance levels. You'll notice that we're in a consolidation here, or kind of a sideways ranging market, as the market continues to oscillate, you know, above these two levels. Sometimes it breaks through and then comes back down, and then sets up another support level. So always looking at understanding, you know, where price is consolidating, and understanding that at some point price is going to break out of this range. And that's really what we're looking for, is that breakout, to see if price then is going to continue in the direction of the predominant higher time frame trend. The broken support levels, like, you know, some of these right here, once it breaks through that support level, it comes down and retests that support level, then moves up for another test of that previous high, and then it kind of consolidates down, breaks back down through that level, and comes down and then retests some of these key support levels down here. So anytime you have a level of resistance that's established, if price breaks through that, chances are it's going to come down, retest that level, and then that level is going to act as a support level in this case. This one, in the case where it might break down through, we didn't have actual closes really below this level. A lot of times if it breaks down here and gets some solid close, it'll come back up, retest that level, and then potentially roll over to the downside. Overall, we don't know what the higher time frames look like related to this chart. This might be an overall higher time frame uptrend, which means, you know, the breakdowns through these levels a lot of times are going to be a false breakout, and the market's going to reverse back up because the higher time frame trend is in an upward direction. So when we're looking at trends, really important, even with support and resistance concepts like this, really important to understand the complexity of trends and how they all work together. So again, what we're looking for is to utilize these support and resistance levels as key points around our trading strategy to identify high probability trade setups. Now, if you already work with things like pivot points on your charts, this will be sort of a review for you. It'll look something like this. Each of these dotted lines here represent a calculated pivot point, and you can readily see the day's price action reacting to the various pivot levels. Every charting package that you use will have some type of an option for floor trader pivots or pivot levels of different sorts. They're all basically calculated the same way based on the previous day's market close and sort of an average of price. So you want to keep in mind here that there's no guarantee that price is going to respect these levels on any one given day. So it really is imperative that you couple these pivot levels with actual historical price action to help you determine forms of clustering price action of support and resistance levels. In this way, you'll have multiple technical factors working together to determine some valid levels for trading and looking for your strategy setups around some of these clustering levels of support and resistance and pivot points. So again, it's just one more technical factor that we can add to the mix. And you can see at these levels where some of these overlap, we're getting very precise turnaround points in the price action. Some of these levels right here, very precise, where the market's coming down and hits that level and then bounces up for a little bit of a rally before it rolls over again and then retests another point. And so looking for even where these pivots tend to cluster as well. If it's a single one, not so much. I'm looking for ones that kind of have a double or even a triple pivot that are combined. And then just looking historically to see where price action has been supported, and then also looking for price action way back here that might support some of these pivot levels. And that's really where some of our horizontal lines come into play, where we can overlap past price action with some of these pivots to help us forecast and determine where these turning points or where some of these stopping points may may prove to be very effective and reliable. So how do we use another key piece of information, Fibonacci retracements, as another technical indicator? Well, the biggest mistakes I think that people make with Fibonacci retracements is really just drawing the retracement lines improperly on their charts. Okay, the correct way to draw a Fib retracement is from the swing low to the swing high in an uptrend, and from the swing high to the swing low in a downtrend. Okay, if you draw it any other way, then you're not going to have the 50 and the 61.8% zone defined in the appropriate place on the chart. Okay, so drawing the lines properly, as I've described, is going to place the golden ratio, that 50, 61.8%, in the correct position on the price chart, which represents the correct Fibonacci pullback level. So as you can see on this chart, the correct pullback level is highlighted between the 50% and that 61.8% level, representing a buy zone in an uptrend and representing a sell zone in a downtrend. So again, we're following a solid trend. The green zone, as you can see right here in this uptrend, just represents a sensible place to get long this trend. It represents a reasonable pullback level to get long again in this uptrend. And then on the downside, we can do just the opposite, right? Draw the fib lines from the most recent high to the most recent low, or in the direction of the trend to get that proper alignment from the most recent swing high to the most recent swing low. And as price is down around here, consolidating, getting ready for this rally, we've got our Fibonacci drawn in there. We're just waiting for price to rally back up into that level so we can start to look for a trade setup in and around that key level again. So one way to know that you've drawn it, these Fibonacci lines correctly, is to look at the pullback direction. The pullback in this case should always be toward the 100% level. The pullback in this case, again, always toward that 100% level. If you have a 0% level right here, then you've got it drawn backwards, okay? Question here from Jason. He's first out of the gate. He's asking, what exactly is a swing high or a swing low? Great question. These are part of the basic concepts of reading price action. So swing high is going to be a high like right here. That is a peak that then results in a pullback. That results in a higher low. And then from the higher low, that's usually a 50 or a 62% retracement of, this most recent trend right here, pulls back into that section, usually up against some previous level of support and resistance. Then it makes its next move up to another higher high. And then it sets up another pullback into that 50, 62% zone and then makes another higher high. So that's where we get these higher highs and these higher lows. And all of these higher highs and higher lows represent swing highs and swing lows. Okay, does that make sense? And so those swing highs and swing lows are really critical in reading price action. If a market is making higher highs and higher lows, then if we're setting, a stop loss, for example, we don't need to do that with Nadex contracts because it's an option, but I'm just saying here for technical reasons, if we set a stop loss behind this swing low, chances are pretty rare that the market is going to reverse and break down through that swing low to provide a lower low, because we know that upward trends make higher highs and higher lows. And so we're just stacking those probabilities just slightly in our favor. Richard's got a question, are any of the fib retracement levels more accurate than the others? We only use the 50 and the 61.8% zone. I don't use any of the other ones. The 78.6 zone, if I was going to join the market in this uptrend right here, then I would be placing my stop loss below this 78.6 level, and that's how I would use that. But I don't use any other level. Like if price comes back and touches the 78% level, I don't use that as a level to get long an uptrend. If it breaks down through that level, chances are it's probably going lower because there's something else wrong or broken with this trend. So you really want to maintain this sweet spot nice and tight between the 50 and that 62% level, just like we do here on the downtrend. And so that's always the case. These other levels, there might be a 38% level, and some of these other ones, we're not using those with this particular trade strategy. Good questions there. All right, so let's go ahead, put everything together that we've learned and begin to build up on this trade idea to see what this looks like. So here we have a 60-minute chart on the euro dollar, and now we're getting the third pullback into the buy zone right here that I have circled. And once again, we draw that fib level from the swing low to the swing high in this uptrend, which gives us our sweet spot between that 50%, 62% level. And we have another cluster right around that 62% level. And we also have a pivot point, and we also have some price congestion or previous levels of support and resistance right there. Okay, not an exact cluster, but everything's pretty close. And we do have a secondary level of support at this 76% level with some of that price resistance, because more than likely we're going to be placing some type of a stop loss just behind that level, and we want some protection for our stop loss. But the level that we're looking to potentially get long this trend is right in this sweet spot zone. And if we can couple that with all of these pivot points like that, that makes it very good. It didn't stop, price didn't stop dead on that level. It went a little bit further, almost into some of these other levels here. And if we go back, you might find that there's maybe a really solid level right along that 134 area that might have caused that bounce right there that maybe other traders were looking for. But nonetheless, everything is pretty concise and precise right around some of those key levels right there. And that's really what we're looking for. So we got a nice uptrend, higher highs, we've got higher lows. It's just another pullback into the zone. If you looked at this pullback right here, again, probably right back into a 62% level. This one right here, from swing high to swing low, probably another pullback right into a 62% level, right up against some previous price congestion, and then it launches back up. So usually very, very consistent types of price action around these fib retracements. I really like using these quite a bit. And then here's a summary of our trade idea that we've been kind of building up over the last few slides. As I've described, some of these support and resistance clusters. I've got some of those labeled with some of these red lines right here. Just a closer look at that level becoming support just ahead of that 76% level, but again, not too far from that 62% level that we were looking at just on the previous slide. So we've been able to strengthen a single indicator like a fib retracement to include additional technical factors like price action support levels, these pivot levels, all these different things that start to stack up and create an entire strategy for us built around key levels where we can anticipate potentially very specific kinds of price action response. So our entry level on this trade is right at that 134.30 level right here, because we have that clustering right with the 61.8% and then a couple of pivot points right in and around that area, both actually 1, 2, 3, about 3 pivot points in and around that 61.8, which gives us a pretty good idea that of a stopping range and a turning point for price action. So we'd have our stop then, if we were using a stop, we'd have it right below the 76.8 level. With Nadex contracts, we don't need to do that because the stop loss is built in to the contracts. Okay, so let's go to the next slide, see what kind of Nadex contracts are available at these levels. Here, just kind of did a clip at the time of the various levels that we were looking at. Here's the one that I found at the time that worked out the best. This was actually a spread, and you can see the spread range right here. So the cluster level of the 1.3430 going long, the first contract, just slightly out of the money. It's got a floor at the 134.60 level. The asking price is 134.73 right here, which translates to roughly a 13 pip risk. Second contract has a floor of 13.35. That one's going for 13.46. So you get about 126 pips of risk, quite a bit more. So this contract is more expensive. It's already in the money, and that's the reason why. But since our ultimate profit target is the 135 level, both contracts could potentially work out, but we tend to get a much better reward to risk looking at the 134.60 contract, and it's a lot less expensive. So we'll go with the first contract in this list with an asking price of 134.73, and we're risking the 13 pips for a potential profit of 70 pips. That'll be the max profit on this trade, really just depending on how fast the market moves relative to the expiration time on this contract. Now, since our trade setup is on a 60-minute chart, it's taken an average of about 5 to 8 hours for the market to respond to these pullbacks. So really the first question is, do we have enough time on this contract? And at 3 hours, that's, it's somewhat under the historical guidelines of how this chart has been performing in this setup. But more often than not, if we're going with the direction of the trend, you can see a lot of times when these setups occur, the market moves very quickly on that snapback going in the direction of the predominant trend. So you guys might be thinking, okay, why does this work? Well, here's the method to the madness that we've been talking about. It's trading with the trend, taking that path of least resistance, going with the momentum in the market, gives us price action, predictability, and confidence that the trade is a high probability setup. So these trends have the tendency to move in waves of buying and selling momentum. So identifying the turning points within these advancements and retracements gives us a lower risk trading opportunity to capitalize on the trend momentum. So we're anticipating these turns in the price action using the clusters that we've been talking about related to multiple support and resistance levels clustering in and around that same zone. Okay, so you're going to find strong trending charts across multiple time frames to ensure there is good price momentum and price predictability in the market that you're interested in trading. Then move down to the lower time frame clusters of support and resistance levels to find that historical price action combined with any pivot points, fib levels that you can find. And as I've already stated, the more clustering you can find within the same price zone, the stronger that zone becomes. Okay. So as we move down to the lower time frames, then the 4-hour chart beginning to trend down with some lower highs and lower lows. Price has been flirting with the 1.225 level and looks to have made several closes below this level and is now pulling back into this level. And so what is the chance that this previous level of support is now going to become resistance in this ongoing downtrend with lower highs and lower lows? Probably pretty good that at some point, either at this line or at some of these other potential points up around here, we're going to have a reversal and we're going to continue that particular downtrend. So as we look at the continuation of that same chart, we draw the first fib retracement line that you see here. 50% retracement kind of clusters right in and around some of those key levels. As you can see, gives us kind of a nice zone setup for our key support level, which when support is broken through and then retested usually becomes, again, that resistance level for the next move lower in this downtrend. So we have a key level of price congestion, 50 to 62% fib level overlapping that price level like we see right here, and this provides us a very specific entry point to the downside with a potentially a well-protected stop that helps us define our risk level. We also spot a weekly pivot point and a daily pivot point in the same area around that 1225 level on the 1 hour chart that we can see. So we have some nice pivots sitting in right there. So it looks like we have a couple items coming together on this setup, right? We got the 50% level coupling with the 1225 level in price action with the pivot levels. So we've really just identified a zone for ourselves that is very reasonable for a turning point in this downtrend, and it's going to give us the next leg to the downside in this price action. And then looking here at the results of that setup, didn't turn around exactly at the point we thought, but overall gave us a very good definable zone, and the turnaround happened and we got a nice retest of that level here at the bottom. A lot of overextension here, big candle, retest of the level. That's where I'd be closing out this trade right there. So everything that we do here is based on some very solid price action and everything that we want to accomplish. So we will be using these types of trade setups and price action analysis every Tuesday morning on the live Market Movers webinar. It occurs at 11 a.m. Central Standard Time, where we put these strategies into action in live market price action. So a great opportunity for you all to see how we deploy these strategies in real market scenarios. So just in wrapping up, Nadex is making an investment in your success as an investor with some of these webinars, and that's why we sponsor events like these today. A couple of different ways for you guys to get in touch with us. Phone and email listed here for any questions that you may have, or you can ask me your questions right now. Just use the question box on your screen as you've been doing. Demo accounts also available to provide you some familiarity with the contracts and what we've been talking about today. For current members, if you'd like to begin trading again, just go ahead and log into nadex.com. Take advantage of some of the advanced education webinars that we're offering. It'll help you take your trading to the next level. If you're new to Nadex and you'd like to possibly set up an account to begin trading Nadex binaries and spreads, just go to, again, nadex.com. Click on the orange box. I believe it's in the top right. It says sign up. Fill in your details there, and someone from Nadex will respond via email to get you started. So before you sign off, there's a short survey upon your exit. Please let us know your thoughts. And again, I'd like to thank you all for joining us. Have a great rest of the week trading, and look forward to talking to you next time. Take care.